Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a great day. To start things off, Element Group, a cryptocurrency economics and digital asset solution analyst, published a report explaining that the SEC's delay in approving the Bitcoin ETF proposal is the main reason why the market has become so boring, quote unquote, in recent weeks. Here's a little chart right there. They said one can argue that the depressed volatility patterns we're seeing with Bitcoin is the market slowly adopting Bitcoin as a store of value, or an SOV. This was written by one of the analysts, Tejas Nalval and Nevin Luan, in the report published last week. However, they added that it seemed a bit premature in their theory, to say the least. Another unconvincing theory cited by the report was that Bitcoin's price discovery mechanism was becoming more efficient. Bitcoin's volatility index remained at 0.84% earlier in January. However, in the last 60 days, the figure dropped down to 2.71. Hence, Nalval and Luan agreed that Bitcoin ran out of juice heading into the fourth quarter. The report also pointed out that Bitcoin bucket shops, brokerage firms, allowing people to place bets on the price illegally, are negatively impacting the market. Bitcoin's price is also dependent on the SEC's approval of or refusal of Bitcoin ETF proposals. This year, 10 ETFs were rejected by the SEC. The Winklevoss Twins' ETF in July, and the rest of the 9 ETFs in August as well. There were a lot of other... What this comes down to is that people are talking about, I've read a lot of other articles as well from other people, and they were talking about that crypto has become extremely boring because there's no longer this energy that we are trying to move the financial system forward, or that we're trying to move everything ahead, or that the market is going to do so and so, or this is going to eventually happen. It seems that everyone has just focused and everyone is honed on one simple thing, and that comes down to the Bitcoin ETF, which is completely ridiculous. That not only does Bitcoin already control the entire market as far as movements go, but we are now also secondarily dependent on the Bitcoin ETF being approved or not approved, and this is what gauges other prices to move forward. And when prices, so when we get no news about the ETF or generally at all, I know this seems a bit insane, these jumps over here. But if you look at if you move it back and look at how the charts have actually been moving, they're moving completely sideways, and it looks this little crazy jumps and stuff because it's a 7 days, so therefore it's a bit more zoomed in. The prices aren't really going anywhere. They're not doing anything. One of the main reasons why a lot of people have said that they've gotten into cryptocurrencies was because of the actual volatility. They loved this movement back and forth. It was more exciting than stocks and bonds, because stocks and bonds typically on a normal day, they move exactly like this. So these people got into cryptocurrencies because they obviously see that there is money to be made in the market, but also because of the volatility in the market allows them to make even more money. But when there's no volatility, what's the point of being in the cryptocurrency market? A lot of people have said that the Bitcoin price and therefore the entire market has completely bottomed at this point. Everyone is just waiting for the ETF. But actually, on that same exact note, so there's news about the ETF stuff all over again as well. The U.S. Securities and Exchange Commission, or the SEC, has outlined a time frame for reviewing proposed rule changes related to a series of applications to list and trade various Bitcoin exchange-traded funds, or ETFs. The review period affects 9 separate ETFs that have been proposed by 3 different applicants, according to the documents filed by the SEC on the 4th of October. The new amendments affects a pair of Bitcoin ETFs that have been submitted by ProShares in conjunction with the New York Stock Exchange ETF exchange NYSE Arca. The other affected applications are the 5 further proposed ETFs from Direction, also with listings on NYSE Arca, and 2 proposals from Granite Shares for listings on the CBOE. The SEC has solicited any party or other person to file a statement in support or rejection of the proposed BTC ETF by the 26th of October. The regulator has outlined that its prior orders disapproving proposed rule changes for all 3 applicants' proposals will remain in effect pending the Commission's review. I'll get to that in a second. In a separate notice, the SEC has filed amendments to specific changes and clarifications that have been put forward by Granite Shares regarding its proposed model of operation. As reported in August, the SEC has, okay, that's not really that important. There was other news as well. I thought it would go a bit more in depth in here, but the thing is, they said that you may have noticed about a week and a half ago, 2 weeks ago, when we had the people who went to Washington, D.C., and they spoke to the people, the CFTC and the SEC and other people on Capitol Hill, if you will, who are making the decisions, and they kind of told them in the nicest way possible to get their stuff together because they are, for some, like I said, for some reason, and it drives me crazy, everyone is focusing just on the Bitcoin ETF. So a couple of days after that happened, the SEC then came forward and said that they're going to be re-reviewing the 9 ETFs that they shut down. And they are looking for more people to send them messages the same as the last time. And I feel like this is one, I'm not expecting any of these 9 to actually go through. And what they asked for is, well, remember before months ago when we had news about the one that they were potentially going to maybe approve from the CBOE in September, and I was telling everyone in the video that it was possible to actually message them and send them your information and what you thought about, and should they approve it. And they said that there was like a record-breaking, like over 1,000 people had chimed in, when normally you get maybe 2 or 3 people, not hundreds, like 2, 3, maybe 4 people on a good day who were actually commenting to the SEC when everyone was sending in their information of what they thought about the upcoming proposal for the CBOE ETF. And we had, I'm pretty sure it was like over 900 or something like that, as far as people who had chimed in, if you will. And then it still got rejected. So now they're asking people to once again, please send us exactly what you think. Or I think this is all, they know what they're going to do. They know exactly when they're going to do it. I think this is a complete runaround. And I think it's kind of sad that it's actually come down to this. The fact that I already have expressed my anger in the past about Bitcoin already controlling the market. If Bitcoin is actually the great king of the market and is as great as everyone else says that it is, when all the other coins have fiat pairings and crypto to crypto pairings, Bitcoin will then prove its worth as far as if it should actually be the number 1 coin. But the fact that not only is Bitcoin controlling the prices, but we have to now wait for approval or disapproval from a Bitcoin ETF in order for the price of Bitcoin to start moving, and therefore the entire market, is becoming a bit out of hand. I think the SEC knows this. We've had people within the SEC who have told the other members of the SEC that they should just approve a Bitcoin ETF because there's no reason in disapproving them anymore. There's no reason in saying no, especially over the last 4 years. I'm going to assume that by the 26th of October, we are going to have 9 more disapprovals. And then we're going to have all the analysts and stuff like that telling us that Bitcoin's price isn't going to move this year, like I've stated before. And we're going to have to wait for, what is it? I think the next one is in February. If I'm not mistaken, I think that's the next time that the CBOE is going to be reviewed or something like that. Or that's like the final cutoff line when they pushed back the one from September. I think it's in February, if I'm not mistaken. This is why we get all those people talking about that they don't think that an ETF is going to be approved until 2019, which is a major problem, which then tells us that if we, in essence, what they're saying is that if we do not get approval here, then we have to wait for hopefully 2019. What is that? 5 months away from the deadline for the other one to maybe, hopefully, potentially have a cryptocurrency market that's actually moving. It's all completely insane, and I don't know how much longer this is going to go on. I assume they're dragging this out for as long as possible. You may have also noticed, remember the other countries who told us that they were going to give us some type of regulation or regulatory approval or regulatory this as far as cryptocurrencies, and they've been talking about this since April, and they all said that they would do it in September. Not one of them has spoken up except for India, who said that they needed to postpone their announcement once again. I think it's sometime in October or November, if I'm not mistaken. When you want to talk about price manipulation, this is exactly what it comes down to, that we have to wait for the saying from a handful of people are deciding the movements of the entire market. And the fact that crypto is global and not, I told you, if Bitcoin was just based in one city or one state or one country or one province, that's whatever. But the fact that this is a global thing right now, and everyone has to wait for the words or approval from a couple of people, is, at least to me, in my personal opinion, absolutely disgusting. And I hope that crypto moves to a place where we don't have to worry about what a group of people say in order to get the market moving once again, because this is more or less gone on for far too long, at least in my opinion. Next up, Circle Invest announced yesterday the launch of 3 new collections of index funds for cryptocurrencies, and I'll get into why this happened. Divya Argawala, Senior Vice President at Circle, posted on the company's blog that the Buy the Market feature was so successful that over 30% of users are taking advantage of it. As CCN reported, Circle released this feature in May as a way for customers to buy a market cap weighted position in the assets listed on the platform. The 3 new collections will contain an index of coins based on their main goal mission, either platforms, payments, or privacy. While some cryptocurrencies or crypto enthusiasts may take issue with the broad characterizations as a clear overlap between them, Circle has picked out coins for each collection. Crypto is complicated. This was said by Agarwala. Many projects aim to solve similar real-world problems, but take vastly different approaches to get there. She said projects like Bitcoin, Bitcoin Cash, Stellar, and Litecoin are trying to build superior payment rails based on blockchain technology so that making payments is as easy, instant, and as borderless as sending an email. If customers are passionate about this category of assets and want to invest, they can simply buy the payments collection. Each of the assets in the collection will be weighted by market cap. Customers will also be able to educate themselves on the collections through our in-product content, end quote. The option to purchase the collection is now available in Circle's Invest's latest update on their iOS and Android apps. Cryptocurrency index funds have gained attention as major exchanges and wallet providers roll out the feature and outdo each other or try to outdo each other. This is perhaps not surprising given the success that low-fee index funds have had in the equities market. Coinbase, for instance, launched its own version of the collection fund for retail investors on September 28th. They called it the bundle, and there was, what's the other one? It was Abra, I think, also created something. It doesn't have here. Abra created something a couple of days ago as well. So now Circle is trying to do their own thing where they're trying to allow you to be able to buy a bundle or a group of cryptocurrencies at the exact same time, because this, so what this is coming down to, I don't know if you realize, and I spoke about this if you missed the other video where I was talking about Coinbase actually launching their buy the market feature, whatever the heck they call it. It comes down to the fact that we have had so many ETF rejections. People are looking for a way for other people to be able to invest, if you will, in a crypto fund made up of multiple different cryptocurrencies without actually having to go through the SEC to call it an ETF, and therefore they are still offering something that is similar to an ETF, but they don't need the approval of the SEC because the SEC and the CFTC have taken so long and given any type of clarification on anything in the market. Not even one thing has made it through, even something that they said before about Ethereum. One of the members of the SEC backtracked on it as well and said, no, we didn't officially say that Ethereum was not a security. So what this is coming down to is, I understand that the different exchanges are trying to outdo each other and trying to make sure that their products are well known, and this is happening, and we're also going to offer this as well. But this is, people are trying to find a way to not care about the actual SEC anymore. Whether that's going to officially work in its entirety is another question in itself. This is why we have other countries, what was it, Sweden a couple of weeks ago, who had ETNs, and they said they weren't ETFs, and therefore they were able to denominate them in US dollars and then offer them to people within the United States. And then the SEC got upset and said, no, you can't offer that to people within the United States because it's not regulated by us. And they said, whatever, it was a whole different ridiculous thing. But everyone's trying to figure out a way to move the market forward. And it's very odd, at least to me, that the future of price movements and therefore the at least short-term 5-month movement of the cryptocurrency market is dependent on, once again, a group of people. So I looked through Circle's website and I was looking for exactly what coins they offer. They said they have Bitcoin, Ethereum, Bitcoin Cash, Ethereum Classic, Litecoin, Zcash, Monero, Stellar, 0x Qtum, and EOS, and they're always looking to add more. I have a feeling that is true and false at the exact same time, if I'm not mistaken. I think Circle is in the United States, so I'm pretty sure they have dug deep trying to list anything that they can without the actual regulatory approval or anything that may have been given a thumbs up by any other platform out there. But as of now, it seems like a very good idea. I do like the idea of being able to do this. I do, because a lot of people do want to spread out their investments. This is not me telling you to invest directly in Circle. This is not a paid advertisement. It's just me saying I like the idea of what they're doing. I like what Coinbase is doing. I like what Abra's doing as well. I like the idea of being able to not hedge your bets, but kind of like the thing that Coinbase has, like if you have $25 and you want to invest in 5 different coins, they'll put 5 into every single coin that, if you do this maybe, once a month, money pending, if you have the money, whatever. I think it's very clever. I think it's a way for you to be able to get into different types of crypto as opposed to dumping the entire thing like just into Litecoin or just into Monero. You have different options when it comes to all of that, but I'm gonna move on from this. It's weird how much the SEC is like controlling so much of this. Anyway, let's move on. Next up, so Bitcoin is in the news, and it's going to be a bit of a doozy, and I'll try to tread as lightly as possible. Some dub it a breakthrough. Others call it a network attack. Those with the prevailing opinions leading up to Mark Friedenbach's much anticipated talk at Scaling Bitcoin Friday, where the Blockstream co-founder presented for the first time Forward Blocks, a proposal that claims to make future contentious changes to Bitcoin, such as block size increases or proof of work change, easier to do. It's a big announcement, one that was shrouded in secrecy in the weeks leading up to the event, as it challenges core perceptions that are widely held within Bitcoin's community. Chief among them is the assertion that massive changes can be made to Bitcoin in a backwards compatible way without asking users to upgrade their software. One issue that many Bitcoin users use the protocol to achieve a kind of sovereignty over their money, and that mandatory software changes essentially undermine that control, has long loomed over protocol changes, surfacing as a major point of contention that ultimately led to the network's infamous Bitcoin Cash fork. In this way, Friedenbach's research addresses an issue cryptocurrency developers have been grappling with for ages. How exactly should bigger changes be made to a massive distributed system? Many would argue that most drastic Bitcoin changes are, and should be, difficult, contending that as Bitcoin is decentralized, quote unquote, and has no king, users should be able to choose to adopt or reject changes. That's going to touch a bit on the Bitcoin Cash fork, or why we've had other forks. A lot of them have been cash grabs, but the reason that we had the Bitcoin Cash fork ultimately came down to the Bitcoin network as it is right now is incredibly sluggish, and the people who forked Bitcoin and made Bitcoin Cash and maybe even Bitcoin Gold, that's a little bit of a gray area. They noted that they realized that the Bitcoin network can actually be scaled, and therefore they were going to break off from the network, make their own new chain, and they were going to scale the blockchain the way that Satoshi intended it to. But the people who are Bitcoin purists, the people who believe in Bitcoin at its purest form, believe that Bitcoin, there, as it has no king, as it says over here, and has no, if one person is making a choice over the entire network, even 10 people, that millions of people are using. Therefore, this is a centralization thing, and this should not happen. And Bitcoin is, a lot of people believe that Bitcoin is perfect as it is right now. And this is where we get the idea that if Bitcoin can't be used in its purest form as it is, as a method of payment for people around the world, that we should simply just use it as digital gold and a store of value, which, without getting too deep into it, is the opposing argument for people who have made the other forks. They say that they also claim that they also know Satoshi, and they say that the reason why they have forked is that not only do they know Satoshi, maybe not, but the original intention of Bitcoin, or the idea for Bitcoin, was to be used as a payment method, and therefore you should not, they say, use side chains or second layer solutions in order to be able to make it a payment method. You should simply just update it the way that it was meant to be updated. And like I said, I'm treading very carefully. It's a very touchy subject. I've mentioned stuff about this before, and people tried to bite my head off. I just give the news. It is what it is. Further, it was thought that some of the biggest changes to Bitcoin could only be made with a hard fork, a change that isn't backward compatible, requiring all the cryptocurrency users to upgrade to keep up with the change. Or as Friedenbach argues, such was the case before forward blocks. He said most of the scaling debate is wrapped up in the issue of how to do a hard fork safely and when, if ever, we should do a hard fork for scaling purposes. He said this is Coinbase. However, with this new work, he argues this isn't a problem anymore. He said forward blocks makes that whole argument pointless. We don't need a hard fork to scale Bitcoin. If and when we decide to do so, it can be accomplished as a soft fork, like Segwit was, end quote. Here, Friedenbach is arguing that opt-in changes to the Bitcoin network, such as the ones used in Bitcoin's upgrade last year, could be used for even larger changes. A developer working in the background, Friedenbach's not particularly well known in cryptocurrency circles. He worked at NASA, blah, 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 so and so and so. ASICs, developers, blah, 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 blah. I guess maybe that's it. This is going to happen for quite some time. What is happening is, for those who are not as aware as maybe other people, even inside of the Bitcoin core group or the main developers of Bitcoin who are looking for, not people on the outside who are looking for ways to try and scale Bitcoin, people within the actual group are now getting upset as well because they understand that Bitcoin can be scaled. Not even without a hard fork or anything like that, but the argument has been for quite some time, and I was told this by many, they call themselves Bitcoin maximalists, quote unquote, is that not only can Bitcoin not scale, but it should not be scaled, and we've heard from a lot of other developers that Bitcoin can easily scale or increase its block size, but people are saying that you should not. It really depends on where you stand on the argument. If you think that Bitcoin's original purpose should not be taken into account anymore, and therefore it should just be digital gold, but then you get to the argument, what's the point of something like if what Satoshi said is gold, and therefore we should follow what he said, why go against the principles or make second layer solutions to speed up the network when we can already do it directly on Bitcoin without having to use something like Liquid or Lightning Network? Like I said, treading very carefully. I just give the news, but this is going to continue for quite some time. We've already seen a couple of weeks ago, a couple of the other main Bitcoin core developers have left the project, and one of them created his own coin, and I think another one has joined another foundation. I don't know exactly what they're calling their coins anymore. Everyone has their own new little special name, but it appears as though many people have come to the conclusion that Bitcoin can increase its block size and also scale properly directly on chain without having to implement anything else. And I'm just going to leave it at that. And I'm going to move on. Last thing is some news about Salt. The South Korean crypto market will add 2 new coins next week, with the support announcing triggering a significant price increase for Salt and Raiden on Friday morning. Salt token and Raiden network token, RDN, 2 native tokens and blockchain-based platforms, leaped more than 35 and 20% respectively on a daily basis on Friday, as one of the largest virtual currency markets, BitHum, said it would add the 2 coins to its trading platform next week. The South Korean exchange released the announcement at around 1:15 in the morning on Friday, promoting an immediate price increase for both Salt and Raiden. I think at the moment the prices have actually sunken back down, so not too important to really talk about the prices. Nope. Nope, not really important. It's just talking about prices. Maybe here. Yeah, the exchange will support one trading pair for Salt and Raiden each, matching them with the country's fiat currency, the won. BitHum will open trading services on the 10th of October at around 15 o'clock, but deposits will be available as of the 6th of October. BitHum, which offers more than 50 crypto to fiat pairs, is one of the largest virtual coin markets with $342 million trading volume within the last 24 hours. I think it's kind of weird that they're only adding 1 trading pair. Maybe this article just isn't as detailed as it maybe should have been, unless they left something out. I think adding just 1 trading pair, especially to your currency, is probably the weirdest thing I've ever heard in my entire life. Like I said, I would assume that they have also at least added it to Bitcoin and to Ethereum as a trading pair. And once again, this also leads me to the idea, if you have 50 in crypto, if you have 50 crypto pairs, or rather, I assume they have more than 50 cryptocurrencies on their platform. why other exchanges, if you are a developer, please explain this to me in the comment section. And I mean this like honestly. I feel like it probably isn't as technologically or technically difficult to be able to do this. We have so many exchanges announcing that they're adding support for new tokens or new coins or new cryptocurrencies. But when they do so, they give it just one, like sometimes it'll just be pegged to Bitcoin or maybe Bitcoin and Ethereum. And it seems like it would be, or rather it should be, that they're paired to every other currency. It's like, let's say you're traveling the world and you have this currency and you go to this country. Like 99% of the time, you can hand them that currency and you get another cryptocurrency, or rather another normal fiat currency back in return. The fact that everything is being pegged to Bitcoin as if it was the US dollar, for me, is kind of worrying because everyone's putting so much focus on just Bitcoin. And I feel like if you are a major exchange, especially if you're a major exchange and you are housing at least 50 different coins, you should have a crypto trading pair for every single coin every time you add a new one. So salt should then be added to the other 50 coins, because realistically, let's say you're trading coins, or let's say you're in a situation where you have, let's say you have EOS and you have Litecoin and you're like, I want to buy some salt, or I think Raiden is pretty cool. Why should you have to then transfer your money back into Bitcoin and then into selling Bitcoin and then to get another cryptocurrency? And this is the crypto market, I suppose, but I want to know if it's, technologically difficult, if there are actually like barriers that are stopping exchanges from doing this. And if so, why haven't more exchanges? I know a lot of them have been, thank goodness, they've been at least adding like XRP and maybe like Litecoin or something like that, but it still seems a bit unneeded. Like, we need more than what they're already giving us. Who knows exactly what the reasons are? Anyway, that's going to do it for this video. Hope you all enjoyed. Hope you all are having a great day, great morning, a great afternoon, wherever you are, wherever you might be. I hope it's amazing. Thank you once again for watching and or listening. Let's hope this eventually picks up, because I've noticed, I don't know if you've noticed, but I've noticed a change in the comment section and like the sentiment of the overall market. A lot of people are very angry right now. And I wish I could personally do something to make everyone less angry or actually move the market. But as of now, we are at the whim of the SEC for whatever reason that might be. But let's hope that we actually get out of this eventually and that the market ends up moving. And for those who weren't here even 2017 to 2016, maybe even 2015, the market was never like this. Every day, it was an emotional roller coaster every single day, but it was still pretty nice. Like, you would have days where prices would go up by 18%, they would fall by 6% the next day, they'd go up around 25%, then they would fall by 40% the next day. It was just a constant I don't know. I guess I'm a little nostalgic for the madness. Anyway, thank you once again, and I'll talk to you all soon. See you.